Swayam Prabha. Digital India. Educated India.
So, what we were talking about? We were talking about commercial bills, and commercial bills in India have come into existence many years back. The oldest form of commercial bills that you see in India is in the agricultural sector, and they have a Indian name. They are known as hundis. And there are two kinds of hundis, I told you. One is the demand hundi, one is the usance hundi. The demand hundi is the darshani and the usance one. Now, the hundi market have survived for such a long time in some areas because of the indigenous bankers. The indigenous banks, which are unorganized sector banks, not recognized by RBI, they do not get any help from RBI, but they have existed for a long time, and they have, at least they are known in two areas of India, one in Gujarat, one is in Tamil Nadu, and there are indigenous bankers elsewhere also, but I do not have the entire picture with me. They have very specific names. In Gujarat they have a name, in Tamil Nadu they have a name, and they are running very well, and they support the hundi market a lot because they make a lot of money from the hundi market. Why would banks support without making money from the hundi market? All right. Now, let us talk about now the state of affairs about bills. This is the conceptual part, and there are other kinds of bills. I told you clean bill, documentary bills, then the trade bills, export bill, import bills. So, I talked about all these kinds of bills. So, there are inland bills and foreign bills also. Now, let us talk about the bill market in India. In what shape is it in? Now, I have been reading about it for a long time. Now, I found something from Professor Bhole's book primarily, and that other book you can get, which is an old book. It is unedited. It has not been revised. Not unedited. What I mean, it has not been recently revised, but that is a useful book. It has a lot of information. It is the Delhi University faculty's book, Suraj B. Gupta's Monetary Economics. That book also has something about these markets. If you want to read up, you can read there. The bill market, if you want to look at the bill market, there are lots of foreign books, of course. Some very good books are out there. If you read them, you will see the bill market development requires certain features, like a country's development requires certain essential things like infrastructure. If infrastructure is poor, like a country like in India, the development state is also poor. It does not develop well. It is a very common understanding. So, the bill market to develop properly, you require certain features. One, since bills are often usance bills, so the payment will be made in future, not now. The commercial banks have to be participating in the bill market, because commercial banks have a lot of cash. And if there is an incentive for the commercial banks to make more money, it is good, because the commercial banks with their cash backup can help the bill market to develop. All right. So, how do commercial banks help? You know how commercial banks help. Commercial banks can serve as an intermediary between the both parties, can hold the bill, forward the cash to the seller of the goods now, who wants it now, and wait. Since it has lot of cash, it can wait till the bill matures. So, commercial bank participation is necessary, number one point. Number two, this is kind of as soon as you start talking about commercial banks' role, you are talking about the secondary market. It's coming into the picture, because commercial bank is a third party. But you have to remember one thing: the commercial banks themselves, if they have to participate in the bill market extensively, then it also requires a secondary market to exist, proper secondary market to exist, so that if necessary, they can part with the commercial bills, sell it off in the secondary market, like share markets have secondary markets, sell them off and get the cash. So, for commercial banks to participate actively in the bill market, there should be a well developed secondary market for the commercial bills. All right. Number 3, if commercial banks and other organizations, it can be non-banks also, participating in the bill market, either the primary market or in the secondary market, whatever. Sometimes they directly participate in the primary market, maybe as a guarantor between the two parties, because the two parties may have a lack of confidence, trust. So, if a bank says, I know both the parties, a bill can be created, then I am coming to those services, then commercial banks, and they are also putting in money, investing in commercial bills. As happens in any other country, it's probably has become quite thin in the Western world, what I realized, which I did not know until this financial crisis happened. Central bank should also have a line of credit or help extended to the commercial banks if the bill market has to develop. Let me put it this way: suppose you are trying to develop the bill market. Now, commercial banks do not have an incentive right now, because the return is low. But if commercial banks are given a line of credit, some cash, directly by the central bank, to say, look, this is the money I am giving you to get involved with the bill market. If this help requires, like you are trying to open your business, you are not so much interested in that area, but your some mentor, father, mother, guardian, somebody tells you, I am giving you some cash to begin that business. All right. With this help, which is like an incentive, commercial banks will find it easier to go into the bill market and participate. Otherwise, if commercial banks cannot go into the bill market on its own, it has to be given some incentive, and the central bank is in the best position to give the incentive. This is how, with incentives, many other things have developed in India also, like the non-bank organizations, IDBI, etc. They were directly funded by the government of India and RBI to essentially provide loans, certain categories of loans, like NABARD, were directly funded, was directly funded by RBI to give certain kinds of loans, which usually commercial banks decline. For instance, small loans, a poor farmer, he needs the money, but the commercial bank say, "Arey, mera to return hai nahi kuch udhar." Normally, a profit-making organization would be interested, but if there is an assistance, then he would say, "Okay, fine, I will give you the money," because even if it is defaulted, it's not my money that I am going to lose. But since I am there in business and they know me and I also know them, I can actively engage them in the bill market. Same way NABARD gives loans to the rural part of the country in India, particularly in a developing country like India. Same way which the industry started developing with the non-banks like IDBI, etc. They did not just exist as a profit-making organization started by a big business family. They were organizations deliberately set up by the government of India and RBI with their funds to help out industrial development. SIDBI. SIDBI is what? SIDBI is essentially for the small industries development. Normally, many banks shy away from that, do not put money. So, where would the money come from? For small industries development. Suppose you open a small industry, you become a small entrepreneur tomorrow after your studies here. SIDBI is one of the places to go to, because they help out. Even SIDBI on campus does certain activities. It is not exactly like charity board, but it has a high risk of default. Okay? So, profit making good organizations often shy away. So, central bank assistance is also very important. This is the third point. Fourth point, which is very important. This exists if you read foreign books, particularly English books, the English banking system, etc., where commercial bills started, and there is a lot of discussion. Many years back, there have been a lot of discussion about say 30 years back, 40 years back, 50 years back, there have been books around, and maybe more years. This is something called acceptance service, which is known in Western countries where the bill market is very well developed. Acceptance services. All right. Now, acceptance service, this word you should learn, these two words, is a service that specializes, institutions that specialize in the development of commercial bills at a low cost. What do? They stand as a guarantee. Acceptance is a guarantee. I accept something is a guarantee that it provides to the drawer of the bill that if you create a bill with this party in Kanpur, when you are selling some goods, the bill will not be defaulted. So, the acceptance service, it can be a bank providing it, knows both the parties. One is shaky, who is selling the goods to the buyer in Kanpur, who would pay later. So, the commercial bill is going to be created, and if there is an acceptance service, a trustworthy, respectable organization who knows that the company in Kanpur can give the guarantee in whatever form it is to the drawer of the bill in Madras, the example that I gave you, that create a bill, don't worry, I am there, the bill will not be defaulted. In order to provide that guarantee, the acceptance service, which may be a bank, who knows who provides the service. Banks specialize in many things other than commercial banking, you know that. They float mutual funds, they often go into merchant banking activities, all sorts of subsidiaries they open. They can open a subsidiary acceptance service, but that of course, the guarantee would be provided against a commission, because acceptance services are specialized institutions which hire people, work there, they collect a whole lot of information, and it becomes more important, these acceptance services, particularly when you are talking about trade. A company in India, in Gujarat, is buying something from a company in Germany, or a company in Gujarat is selling something to a company in Germany. All right? Now, of course, there is this issue about the quality of the product. Suppose the quality has been verified through technical expertise, but how about the financial aspect? Whether the payments will come through or whether they would default, particularly first world country often lack trust. First world countries lack trust in developing countries' companies. Well, if you are a Tata and a Birla, you roam around all over the world, you have acquisitions in England, US, everywhere, everybody knows it. You know what Tata has been doing. They even bought Land Rover, the famous car company, automobile company in England. They bought out Land Rover. They bought out Tetley Tea, the famous company in England. Then it is a different story, but suppose some other companies, new companies doing well, good business in India. So, you require acceptance services. Who knows these companies in India, who is respected by a foreign economy agents, and therefore, a trade can take place, commercial bill can come into existence, all sorts of things will follow. All right. So, acceptance is like a guarantee essentially, which provides in this way. It may not directly involved in funding. Remember, acceptance service is not banking service. Operate in the bill market, they often come with money. Okay, your bill will be paid 3 months later, I will buy it, or I will discount it, whatever. you get the money, but you will not get that amount because you are not waiting out 3 years, 3 months. I am going to wait 3 months and I will get the money from the what you call the drawee of the bill in Kanpur. Acceptance services are not necessarily involved, not at all involved maybe with providing funds, but it is for providing guarantee. So, they are like guarantors in commercial bills, and this has become this is quite common in the first world countries or any country which has a well developed bill market. There are well developed acceptance services companies available, and they are known in UK, for instance, they are known as accepting houses. In UK, United Kingdom, it is known as accepting houses, and often commercial banks who know a whole lot of producers, because they are doing this business day in day out by giving loans, etc., open a subsidiary, an accepting house, which does not deal with money directly, but provides this kind of a service. All right. So, they carry an enormous amount of up-to-date, updated information on companies, how they are doing. Otherwise, how would you provide the guarantee? You have to know how the company has been doing. It is not 10 years back I used to know him. That kind of a statement will not create much confidence in the drawer of the bill, who is writing that bill and selling the goods. So, they carry a whole lot of information. So, it is a very active work with computers, internet, etc. It has become easier, must be, because information technology or information collection and assimilation, etc., processing of this kind of a service center must have become much easier now with the internet, etc., and computers. But they exist from pre-internet age. Remember, they are just not the new ones. They are there for many, many years now. All right. And finally, one more point. This is the fourth point I mentioned. Finally, one more point I want to mention. You may read up books, you may find many more issues that they deal with. Finally, one last point I want to mention is that if a secondary market has to exist, what you need? A good secondary market, like a share market. Bombay stock market is a very good, efficiently running secondary market in shares. How does it run? Who are the institutions, a group of units who run it, who operate it? What are they called? Not underwriter. Underwriters are in the primary market, but the secondary market, who runs them? The brokers and dealers. And some of the brokers and dealers are millionaires. They are big companies. They are brokers, simple brokers. You can become a broker in the share market. So, the brokers and dealers who run the secondary market. Suppose you want to develop a secondary market in the housing sector, which exists very well in foreign countries, I have seen. These are like brokers, middlemen. Some company who collect information on all houses that people want to sell, collect information on the people who want to buy them, all right, and they mediate that. So, a secondary market will function efficiently if you have a well developed system of brokers and dealers in that market. So, the last point is, if you want the commercial bill market to have a good secondary market also, which is sometimes very necessary for financial organizations to come in and participate, because they know there is an exit route. If I want, I can sell them off, there is a secondary market, and get out, because I need the cash for some reason. So, a well developed set of brokers and dealers are required for any item to have a good secondary market, an effective secondary market. So, the same point comes here as well. Brokers and dealers are required. All right. Now, let us see how has been the Indian bill market doing. All right. There is a lot of discussion, that is what I have been reading also, reading up on them. There is a lot of discussion on these brokers, on the development of bill market. Okay. First of all, when I will show you the data, the bill market, the way data exists, we hardly have any data on the unorganized bill market, the hundi market, etc. We do not have any data, at least I do not have. Researchers can go into these markets and collect some information, but that will be one time information. It cannot be updated on a regular basis. So, on a regular basis you do not have data. Now, if you look at the organized sector bill market in India, I will show you data, it is very small, organized sector bill market data. And one of the reasons is that the bill market, the way people have come to know, has been a characteristic feature of the unorganized sector. In the organized sector, the business have not been run with use of commercial bills in India. The practice has not been there. The way it has been in the Western countries, first world countries, it has not been there in India. All right. But what did they do? SBI and also RBI from time to time tried to develop the bill market. But it is very unfortunate that, for instance, State Bank of India's participation in commercial bills completely stopped after 1965. It is very interesting. All right. And the reason is the State Bank was asked by RBI, which had twice at least, they came up with schemes called bill market schemes, one in 1952 and one in 1970 to develop the bill market. What RBI basically did was, one thing it wanted to tell them is that initially that you try to develop the organized market bill market, so that the indigenous bill market, which is the hundi market, which has been hitherto the largest bill market, the unorganized sector bill market, will slowly accept and start participating and coming to the organized market. So, it becomes part of the organized market. So, the approach of RBI was, in the bill market schemes, you try to develop, funds were made available from RBI to the public sector banks like SBI in particular, to develop the organized sector bill market, fine. And the idea also was you develop it in a way so that the hundi market is forced to become part of the organized sector, because their funds are available. But the hundi market has been running on its own with the unorganized sector funding. All right. So, what happened? Hundi market never got funds, of course not. The organized sector market did not develop well, for whatever reason it may be, because we do not have a habit of participating in commercial bills, creating commercial bills. And one of the objectives that RBI had in the bill market schemes is to bring that unorganized sector, like there are people, illiterate people. You develop an education system in a way, you impart education to the local people, but also try to incorporate the uneducated people into your education system, so that the general level of education goes up. But what you did not focus on them. In fact, you are trying to compete with them, to say they got more scared and shied away more from you, and you essentially started teaching who are already educated. So, this job was not done with the RBI bill market schemes, and finally, SBI said we are unable to develop that much. Why was the job not done? Because businesses in India initially after independence, as you have seen in that course, was kept with the government sector, and the private sector was not given much freedom to develop. So, for a long time, 30-40 years after independence, what you had in India was a public sector dominated economy. The private sector was not allowed to develop much. All right. So, who would create bills? There will be some bills between public sector companies, not much, because public sector companies do not mistrust other public sector companies, because they all know are the children of the government. Indian Oil doing business with Air India. How much of a fight will be there? How much of a lack of trust will be there? The climate is entirely different. You are talking about a bill market in the private sector, where the parties do not know, they want to expand, they are trying to grow, and whether there is a support system for the bill market to develop. So, how would the bill market be developing? Kind of economy you had, bill market could not develop. All right. Next, acceptance services were never thought of. The entire bill market developed in England because of these accepting houses, which hardly existed in India. So, even if funds are available, there is no trust. So, banks would have money there, but banks won't be lending them or using them. Government may have given them, RBI may have given them money, but they were not using them. And accepting services were not there, no guarantor there. All right. And then what they did was very interesting. They said, okay, commercial banks are unable to develop the bill market in India. RBI said, okay, other institutions, since after the second bill market scheme, 1970, they said, bring other non-bank institutions, ICI, LIC, UTI, GIC, ICICI, which is a private sector non-bank. All please come in and try to help develop the bill market, they suddenly said. Because banks were unable to develop them. Initially, they were trying to develop through the banks and particularly SBI. So, when I would talk about the interest rate in the bill market rate, I will mention SBI rates, because SBI was functioning there and it used to be called the SBI rate. All right, I am coming to that. So, LIC, GIC, etc. we all were asked to participate, but these non-bank financial institutions had other headaches. Their headache was not so much of bills, short-term bills, money market bills. They are not funding services, they are not accepting houses. They were meant to do other things, merchant banking, finance, industrial development, big things they had. It still did not work. While you open the door to the non-banks, bill market has not been developing in India. All right. Often what happened was that the bill financing by banks was often looked upon as very interesting. If there is a respectable company like Tata, etc., where bills were created and you hold the bills as a middleman or something, you purchase the bills or something. Often what happened was these bills, these institutions were using as mortgages to get a loan from bank. So, the bank funding was giving loan against the bills, and the bills were the mortgages, because bills are so respectable. A few companies who were using bills are so well known companies, their bills were like mortgages, like holding shares and bonds. Very interesting. Banks were funding that, giving out loans against them. All right. There were no rediscounting facility available from RBI regarding bills. Suppose commercial bank has bought a bill, it needs cash, there is no secondary market. Bill market, yeah, I need a secondary market. Now, you go to RBI to rediscount them because you need cash. All right. Already you have discounted it and bought them or something, hold them. Now, you go to RBI to rediscount them because you need cash. RBI was not giving them any support. So, no discounting facility was available to the banks on these bills. So, RBI had a scheme, you do it without much support from us. All right. And then gradually they found often commercial bills, as in India, were not genuine real bills. Bills were written between two parties because of a financial transaction. No real goods really ever changed hands. They were not genuine commercial bills. They were financial transactions between two parties. No goods transaction which has created bill, and this created an enormous problem. These were not genuine bills either. All right. Okay. Now when I look up RBI data site, I find commercial bill data, and I got puzzled. They had inland bills, which is fine, foreign bills, which I understand. So, lot of bills getting created these days, not much compared to the total credit, I will come to the number, whatever. For inland business within India, Chennai से कानपुर goods जा रहा है, bill तैयार हो गया, India से बाहर जा रहा है, बाहर से India में आ रहा है, foreign bills were getting created. Good. So, I looked at the number, how is the number showing over time? Inland volume of bills and the foreign bills. But then I found two words there which puzzled me, purchased and discounted. And I was wondering if a bill, I as a commercial bank is investing, when I look at the banking sector data, I found commercial bill data. I'm putting in a money, why would I make a distinction between purchase of a bill and a discount of a bill? Because bill is usually discounted. Because the bill would be paid later, so I discount that bill, so you get the money now, and that discount factor is my income 2 months later. So, I say 1 crore ka bill amount, I discount it, I give you 98 lakhs or 99 lakhs something, 50,000 or 60,000 or 80,000, 20,000 remains, that is the discount factor, that I will get 2 months later, that is my income. Why is the purchase data? I got very puzzled, and RBI does not explain. Purchased bills, both inland and foreign, discounted bills, both inland and foreign. Who is the purchase coming from? Then I realized what happened, hunting up and down. Demand bills, which would be paid as soon as the goods arrive with the buyer from the seller. As I gave you that example, when I buy some durable goods, Kanpur seller, that shops, ship that good. Yesterday I went there, I booked something with some advance payment, and they will ship it, and these are demand bills they create. As soon as the goods reach my home, I found it safe and okay, I say received on a memo like thing, and I can make the remaining cash payment. The transporter carries that cash from me to the Dukandar, shop owner. This I have done millions of times whenever I bought TV, fridge, whatever, even the other small items also. Then I understood what purchase bills meant. Purchase essentially meant that these demand bills, it will take a few days to reach, a few weeks to reach, but the seller cannot wait even a few weeks. So, these bills were also at some price they were purchased, there is a discount rate also, purchased by the bank, where bank is putting in money and wait out 3 weeks to get the cash from the buyer of the goods in Kanpur. So, purchase data referred to the demand bills, and the discounted data on commercial banks, inland or foreign, referred to the usance bills. I understood that later, quite late. I did not understand initially. All right. So, RBI data, when I will show you, will see that purchase data and discounted data on commercial bills. You can open it tonight if you want, RBI site, you will get that number. And inland bills purchase to discounted ratio was very interesting. Purchase is less than discounted, demand bills are less than usance bills in terms of commercial bank participation. It is like 0.3. 0.3 means what? 30%. 30% of the discounted bills were purchase bills. So, this is how it went, all right. Indian bill market rates have been very funny. If you open Bhole, you will find it. There is one bill market rate which, when RBI used to rediscount these bills for commercial banks, was the bank rate. Bank rate is like the central bank's interest rate. When central bank is helping a bank, it charges an interest rate which is called bank rate. Bank rate is nothing but that. Commercial banks' interest rates are known as lending rates, deposit rates, fixed deposit rates, savings deposit rates, lending rates, etc. When RBI or a central bank lends to somebody, either a bank or a non-bank or somebody, then that interest rate is called bank rate. So, the bank rate was often used to decide the commercial banks' lending rates, etc., against commercial bills. Then SBI had a hundi rate, very interesting. It's called SBI Hundi rate. So, when SBI would discount hundis, which belong to the unorganized sector, at once upon a time they used to do that, they used to use, it used to be called the SBI Hundi rate, but it does not exist anymore. SBI does not discount hundis anymore, what I have heard. Then these unorganized sector, Shroffs and Multans and Chettiars, indigenous banks, they deal a lot with these hundis, etc., commercial bills, unorganized sector commercial bills. And you know what they call this interest rate there? They have a term also for the interest rate. They call that the bazaar rate. It's there in books, bazaar rate. Unorganized sector banks call the interest rate on hundis, in which they do a lot of business with hundis, unorganized sector. Hundi to unorganized sector ka hi hai. And unorganized sector banks like Multan, Shroffs, Chettiars, they use a term there called the bazaar rate. Achha. Then at one point, and still it exists, some commercial banks other than SBI discount bills. That is why I have the data on RBI site. RBI is not dealing with the commercial bills directly, commercial banks are dealing with them, and they are known as the commercial banks bill finance rate, commercial banks bill finance rate. And it is very interesting that SBI has now probably does deal with a little bit with directly with some first class bills only. SBI तो सबसे ऊंचा पोजीशन है पब्लिक सेक्टर बैंक के अंदर. They deal with only with now no longer hundi market. They deal with big companies, commercial bills, Tatas and Birlas, etc. And they call that the SBI discount rate. They call that the SBI discount rate, and the commercial banks discount rate is known as commercial banks bill finance rate. So, about 4 or 5 names you will find regarding the interest rate or the discount rate of the commercial bills. In the literature you will find them. Okay. Now, I do not have any information on these interest rates. If you ask SBI, if you go to them, maybe you will get the information. I have not got any commercial bill interest rates information. One small point I want to mention, there is one other type of commercial bills which not many people know, which do not belong to the money market at all. They are very long term commercial bills, and in these long term commercial bills, institutions like IDBI, SIDBI, big non-banks participate. What kind of bills? These bills are very interesting bills. These bills are, IDBI, what does it do? It helps you to develop industry. So, suppose you need a big machine, but you cannot afford to purchase it. IDBI will lend it to you, or you need some cash for specific investment. All right, IDBI will lend to you. Similarly, IDBI often lends, which are also called long term commercial bills. When a company wants to purchase something, a machine, it cannot make the payment immediately. IDBI stands as just not like a guarantor, stands as a financier for the company in purchasing that machine, say from another country, a foreign land, and expensive, it will be imported. So, IDBI finances it, creates a bill in favor of that company, where the company pays over a period of time like a loan. These are also known as commercial bills, because IDBI is not a bank. So, IDBI cannot give a loan in the true sense of the word, cannot create credit. What IDBI does is that, oh, you do not have the cash, do not worry, I know you, I will get it, procure it, but a bill will be created, long term bill. According to that, you will be repaying money to me, like a fixed payment loan or something. All right? And the maturity is sometimes 5 years and can even go to up to 7 years time they give that bill maturity, to bill to mature, entire payment to be done. These are very interesting things, industrial development going on. A company wants to buy a machine, IIT Kanpur for instance, a new education institution wants to buy some equipments for the lab. It does not have the funds. So, somebody comes and purchases it, but creates a bill, and this institution over a period of 5 years, 7 years repays that money. It is not like a bank credit. Bank collects deposits and creates credit multiple of that. Here it has a corpus, it gives a loan indirectly, it does not give you the cash, it purchases it on your behalf, and temporarily the ownership may be with IDBI, then it hands over that ownership of that machine to you. All right? Okay. And there is a thousands of crores IDBI. I have found data up to 95, 96. I do not have data. Since mid 60s, IDBI started this business, IDBI and some other non-banks, and thousands of crores they have given out as commercial, created this kind of a long-term commercial bill, where the payment will be made in future. All right, some transaction took place, real goods. Basically, a good has come from there to here. IDBI will make the payment now for them, and then will recover the fund from the local producer. The commercial bill gets created, local producer over a period of time. Long term commercial bills, not short term. Money market नहीं है, जो पढ़ा है अभी तक, it's not that case. It's a different kind of commercial bill. So these are what we have found is that the IDBI rediscount rate here, etc., whatever it does, business, has been lower than short term bills and even RBI rates. IDBI has been very generous in that sense. These non-banks have helped your country to develop a lot, particularly IDBI, SIDBI, etc. You have seen SIDBI how much it does for you, even for IIT Kanpur students. They want to do something, develop a prototype, develop a new technology from their lab, their students, and SIDBI helps them with some funding. So these organizations do a lot for industrial development and other things. These are not banks, remember, these are non-banks. They have a corpus and they lend out of it. They do not create credit, they do not create a multiple of that loan, 5 times that amount loan. वो सब नहीं, वो सब बैंक का बिजनेस है. वो मेरे पास 2000 रुपया है, ठीक है, आपको मैं 200 रुपया दिया, उनको 300 रुपया दिया, उनको 400 रुपया दिया, उनको 1000 दे दिया, ऐसा. And then I recover the money over a period of time. So some company in India buying a machine from Germany, they get into an agreement with IDBI standing in between, they know each other very well, being a national institution, and Germany agrees to sell it and IDBI makes the payment. जर्मन वाला भाग गया पेमेंट लेके, अभी लोकल वाला जो पड़ा है, इनके साथ एक बिल तो तैयार हो गया था, वो बिल का पेमेंट धीरे धीरे होता है. Clear? These are very long term bills. So I guess this is enough for your commercial bills.